for another week and another show. It's been a wild week. What have I been up to in the last week? Got rid of my beard. I think you guys saw that last week, didn't you? Yeah. What else happened? Oh, I got scammed today. I bought a hot tub, and the guy's like, it's working great, and he's like, just send the money beforehand if you want to get it, or someone else is gonna come get it, and we preemptively sent it, and now that thing is sitting in the repair shop because it doesn't work as suggested, and the guy is like just taking the money and disappeared. Typical scumbag. So yeah, that was my adventure for today. Cut the grass today at the property. I haven't cut it. Wanted to cut it once myself. Going back to, I think I'm gonna go back to outsourcing that. That took me a couple hours, and I was like, you know what? Done it once. I can say that I've cut the grass at the estate. It's a recession, so it's good to do a little active labor and get a little muscle. Look at that farmer's tan. Jeez! You can see the light and dark difference. Yes, I got a lot of sun today with that. That was great. I enjoyed that thoroughly. I don't know if my chat's even live right now. I see thumbs up, but it's just frozen. So if you're here in the chat, jump in and say hi. Ooh, I bought a cottage. I'm really excited about this. I spent the first minute just rambling here. I didn't have a chance to think about what I would talk about today. So just titled it, if you want to invest with me, and we'll just talk about some of the stuff I'm investing in. I'm very picky, and I'm not actively looking that hard for investment JV partners, but I have one right now. I'm very, very selective. It'd have to be someone who had like 500,000 or $1 million minimum, that wanted to do a bunch of deals and recycle stuff and double their money every 5 to 7 years, long-term plays, that they want to be more passive money partner. I'm coming across a lot of really good cottage deals. And if you check out, I've tried out my first YouTube short. So don't do it now because I'm live, but check out my YouTube shorts. I made a YouTube short where I ripped around in the Mustang. I cut a bunch of videos together. It was kind of cool, of the new cottage we just bought. So if you want to check that out, it's on my YouTube shorts. It's 59 seconds long. And it's the new cottage we bought. It's got a beautiful, right at the back of the lot, it's got a beautiful private access by a waterfall and down a creek to a private beach right on Lake Huron. Beautiful, beautiful property, chalet style, like 12-foot ceilings. The basement strangely had like 11-foot ceilings, which is super rare. Most basements are like 7-foot, 8-foot high basements. So this one was like a diamond in the rough and has a lot of potential. Nice lot, beautiful lake views. Most of those types of properties rent for around $3,000 to $5,000 a week in high season. So it did technically pop on MLS, yeah. But I did lock it up under asking, and it was way underpriced. The fact that it has private beach access out of the backyard, and there's no one else, like you're the last one, like there's no one else besides you that has access to that because their hill is too steep. So you get this access through the conservation by a waterfall. Technically, you're only deeded so far down because you own to the ravine. So technically, the conservation would own the beach itself. But as far as all purposes are concerned, I would consider that deeded beach. And I got it for $650,000. So it was a super steal. It's easily worth $1 million. So $350,000 off on MLS. That property in March would have been over $1 million all day. I think improved in the way that I want to improve it. It has a potential. We'll probably keep it for a long time just as a personal cottage. For us, it was more of something we were looking for to slide into the portfolio. It is undervalued, and there is potential to own it for nothing because we can burr it, right? So we'll be able to refinance it, put it once I improve it and make it a little bit better, and improve it to a point where I can refinance it and pull all our capital out. So it'll literally be zero money down, just be the bank putting the money up. Fortunately, rates are higher, but in this case, I'm actually going to sell. So I have a triplex downtown. If anyone wants to buy it, I will sell it for what I paid for it a year and a half ago. If anyone wants that, I would slide that in plus whatever the closing costs are. So tack on a little bit so I can break even. So I can port that mortgage to my cottage because I have a 2.59% 5-year fix that I locked in. And I'm like, geez, I should just sell that property and port it over to my cottage. And now I'll have a super low rate mortgage on my cottage, which can rent for $4,000 a week in the high season. So you get 16 weeks of high season. You're talking, let's say I use it for 6 of those weeks, 10 weeks I rent it out. Let's just say that's $40,000 over the summer. And then it's got a nice chalet vibe with really high, like 12-foot ceilings. So I think because the gas fireplace and it's like 3/4 of an acre of land, and we'll put like a swim spa in so you can swim and have a hot tub experience, and we'll put a barrel sauna and do the whole experience. So a lot of people do horseshoe, cross-country skiing and stuff. So it can be very much a winter retreat as well. And I think it could easily bring in 100 grand a year, which is like 2% rule. So anyway, we're not looking at it as a rental. It's more for ourselves to enjoy. And like, I could even see myself like I don't know what I'm going to do, but I could even see myself, changing my primary residence to the Bahamas, Florida, and then potentially, I don't know if I move this into and sell it to someone in the family or keep it in the corp, but it could be a place that we go and have our Canadian experience when we're back in the summers in Canada. So it's a beautiful, cheap, affordable property with low carrying costs and just exactly what we were looking for. I am still looking for, if I ever sell this estate where I live now, if I ever, if I ever get to a point where I sell this house, I don't know. I probably will have to sell this house at some point when I leave Canada. Because again, you've got to see what's the writing on the wall, right? You guys talking about the new Inflation Reduction Bill in the U.S. They're doubling the workforce of the IRS. They're hiring like 100,000 agents or something, or 86,000 agents. They're doing the same thing in Canada. Their focus is to audit people. And like, even if you're 100%, even if you're 100% above board, just being compliant and going through an audit, just to supply all the documentation and just to deal with all of that is such a pain in the ass. Like $1,000 an hour, that probably wastes like 40 hours of my time minimum, right? It's like there's 40 grand of my time just to go through an audit, even if I'm on side, which I am. I'm very, I speak clearly to my accountant, my bookkeepers. I'm like, if it's quasi, we should claim it, don't even bother. I'd rather not get audited. I'd rather pay $100 more in tax, $1,000 more in tax. Don't include it. Like I just don't want to get audited. So that's been my modus operandi whenever it comes to books, is like err on the side of caution, pay more in tax so that I don't have to deal with an audit, because an audit's brutal. I have friends who've gone through it and it's just, they're like, so one of my friends is like, whatever they say you owe, don't even try to fight it. Just pay what they say you owe, and it'll save you in the time savings alone. Like who cares if they go high? So that's the experience I've had from people who've been through that. But the richer you are and the more things you have going on, like I have so many businesses that for like an audit would take me potentially, if you go through all the receipts, I have boxes and file folders through of receipts. If you had to go back, like they talk about going back 7 years or something, like that would take years to go through all of that. And it's just, you got to keep it all for 7 years, I think it is. I only have 5 years back because I lost 2 years ago. I had it in a box and I left it in the attic at our old place, and I went back and the tenant there had thrown it out. So shittily, like I would actually be like, I don't have any documents from that time. Like I had boxes with like everything organized. So hopefully nothing ever happens. I probably have some stuff digitized, but definitely not the whole picture. A lot of it was in that box, like all the receipts. I've just tossed them into folders per property. So yeah. Anyway, what did you have your mind on to invest with you on? What did you have in mind? Sorry, I misread that. To invest with you on vacation rentals. So, Jaman, basically I'm looking for someone who is like, hey, I like your vision, I like where you're going with things. I'll let you be in the captain's seat. We form a corporation together, 50-50. You'd be the money partner. You'd loan that money into the corporation. So, no matter what happens, it's loaned into the corp. So it comes before equity. It would be your money securitized in the corp. We would then, myself included, I have a very strong financial backing. So as far as getting financing on properties, I can lean in there pretty easily and help that get done. But if you want help with that, I think because we're both on the corp, we both have to technically qualify for any financing. But we'd either get vendor financing on large multifamily, or we'd look to get bank financing. Typically purchase a property, there'd be a value add. I don't buy anything that's at market price. I always buy at a discount. And so the play there is, how do we realize this new after renovated value? We do that, whatever it is, to get there. It could take a year. If it's a big building, it could take 2 years, 3 years. So it's not a super rush thing, but we will revitalize the property, repurpose it, and then refinance all the capital out. And so in a 2-year period, we're looking at being no money in the projects. Typically, I try to do that in 6 to 12 months. Depends on the size of the project. The big multifamilies take longer to do than the smaller projects, right? So it just depends on the type of project. But yeah, I'd be looking to acquire, especially during this dip, there's going to be lots of opportunities, especially in Florida, to acquire properties that fit not only a lifestyle design, where like, in theory, we could also use, like said partner and I could also use property if you went down for a week and it's like, we can block it off on Airbnb, boom, you can have now a vacation rental in Florida. You don't have to manage, you don't do anything. Like I'll set up teams, I'll set up, like I already have a lot of that logistical stuff worked out, and I'm going through the motions right now, doing my first couple deals in both markets to test things out, and then I bring on investors once I've been through the motions. So yeah, if someone had like $1 million and like, hey, And $1 million isn't a lot these days. Like everyone's got $1 million in their house if you've been in the market like 10 years. If you have a high-paying job, whatever, like most people have that kind of money. And like, hey, I want to park it in real estate. It's super safe. Real estate is inflation hedged. It's relatively safe. It will, if you are doing it the way that I do it, it will outperform the S&P 500 and the NASDAQ, especially when you apply leverage, especially when you can refinance all of your capital out, or most of your capital out, in which case then your return on capital becomes infinite at year 2 because you have no money in the project. You've gotten all your money back and you still have a building now with hundreds of thousands of equity in it. That's how I've made all my money in real estate, is because I'll buy a building for, let's look at this, let's do the cottage deal because we're talking about the cottage. So let's say I got that for $650 and I put $100,000 into it. I'm going to revitalize it. I'm going to improve it. We'll probably build a really nice, I would love to build a really nice like 3-car carport off the front of it. So that this big lofty vaulted cottage vibe when you drive up to it. It's got a wraparound driveway, so we would bougie that up, put maybe a swim spawn and a barrel sauna, a nice fire pit with like 10 chairs so that you can imagine people wanting to stay there and it be enjoyable. Renovate, obviously, the main cottage. It is beautiful cedar throughout, so we'll try to preserve some of that, but I think I have to bring in some new tones and colors. It can't be all wood. The wood is too much, as well as probably renovate the whole place and make it modern and nice. And I'll probably, at some point, I don't know, we would toy with the idea of building a bunkie as well, or a secondary kind of cottage, an ADU. They're all the rage, all the trend, and that would increase income as well. I have experience building, I've done like 100 projects now, and so ADUs, I've done lots of them, and that would be no big deal as well. You can get them pre-made and drop down as like a shed. There are lots of ways you can go around doing it, but something like that on that project as an example. Let's say I made it for $750 and I refinance at $1.1 million. If you do the math on that, say 80% loan to value on that, let's just say $1 million, super conservative. So $1 million is $800,000 mortgage payment for $650, spend $100, $750, means I get $50,000 out, and I now own this project with $200,000 in equity in it, and none of my money. It's paid me 50 grand, and I have the cottage, and it's cash flow positive. So that's a situation where, like, over the long term, I could see 20 years from now, property like that going for $1.5 million, no problem, right? 2 million. So there's a lot of potential there. And that's what I'm looking to acquire, is build a portfolio where, and with the recession being how it is right now, I do have gunpowder, but it's like not enough. To buy the dip properly, I need like 3 to 5 million extra that I can lever up to 10 to 15 million, as well as my capital doing deals. So that's why I'll open the floodgate a little bit to the right partners. Like if someone just wants to do one deal, I'm not really that interested. There'd have to be enough capital and a commitment that when let's say we bought a cottage and we refinanced it and pulled the capital out of year 1, that money doesn't go back to the investor. We leave that in the corp and we buy another property. And we do the same thing, pull the capital out. And I'm incentivized to want to get that money back so I can do another deal, right? So it's continuing to refinance the properties. Well, once you've added value to them, refinance and continue to recycle that capital. So the capital stays in the corp and we continue to reinvest profits. But again, flexible. To the right investor, I could be flexible to do something where you withdraw cash flow if you really needed it. But yeah. William says, Mike, curious how much you will or won't upgrade cottage. Well, it's already a full season, like a 4-season year-round property. It's not even really a cottage. Like it can be lived in year-round. And that's what I look for. I don't really, unless it's a really good deal, I don't like the 3-season cottage because you got to rent it. It's not that big of a deal, I guess. Turning a 3-season cottage into a 4-season cottage is as simple as basically waterproofing the water line to where it comes in, usually in a crawl space. In this case, we have a basement, but in most of the cottages, they have crawl spaces. You just got to basically insulate that, and then insulate the crawl space itself, insulate walls with blown insulation, and the same thing with the roof. If it's got a vaulted pitch, if it's got an attic, you can just blow in. We're talking like 10 grand or less to winterize in most cases. Maybe I do windows, that'd be a little bit more expensive, but in most cases, winterizing, or rather turning a 3-season cottage into a 4-season cottage is like 10 grand. Not a huge deal. And now you have all those extra months of cash flow, and because the area that I want to buy cottages in is 45 minutes from London, a couple hours from Toronto. There's a lot of people who want to, like 500,000 people in London, and there's like another 100,000 in Sarnia and surrounding areas that want to escape and just have like a weekend getaway. Like, hey, you know what? We just want to get away with the kids somewhere with a nice fireplace, maybe a hot tub. We can see what views of the water. That's cool. Boom, done, right? Like if they can rent it for $300 a night, boom, they're happy, right? For a week or for a weekend, even it's $1,000, boom, done. So there's significant enough demand, and you can obviously drop the price in the winter months when people are less interested. But if the space is big enough, you can use it for family reunions. People will book it for a week at Christmas just to get away from, or bring family in and get away from their current house. And so I think in a recession, staycations tend to do fairly well. But you got to really target, I think it's better to stay on the luxury end as opposed to targeting the poorer individual. Those people suffer more in recessions. The upper middle class aren't really affected by recessions. Like if your house just appreciated $2 million and real estate drops, it's like you still got $1.5 million in equity. Who cares? Your vacation's $1,000, $10,000. A lot of these people are white collar and are largely unaffected by inflation. But the poorer people who are on $50,000 salary, let's say, or less, inflation hits pretty hard. If inflation's up 10% year over year, and you're having a 10% pay raise, you've lost buying power. People with assets rise with inflation, right? So the wealthy who have a lot of assets, they're fine. Inflation doesn't really kill them in the same way through this recession. Inflation is what's going to kill most of your assets there. So, and not kill. I mean, the goal is just to outpace. I don't know. Even the Nasdaq is way underperforming inflation. If you have your money in a savings account, interestingly, this year and making 2% on your money, you've actually outperformed most of the equities, pretty much all of the equities in the major indexes. Inflation is it's crazy. Inflation's up. So the buying power of your money's gone down, say 10% over the last year, and then equities are down 20%. So it's really like you lost 30% on your money, which is shitty. There will be a bottom. I don't think it's yet. I'm still short the market. I've covered my shorts several times. I'm not naked shorting, but I continue to lose money, especially today. Inflation came out like they're improving, right? We're talking about 8.5% inflation today. That's not good by any means to me, but the market had a euphoric reaction, like 10% bumps in a lot of tech stocks. I think the market was up 3% today alone. They're like, hey, we're winning the war on inflation. It's like we had one good reading month over month. It's like, year over year, the same month. It's like we haven't beat inflation. Rates still need to come up. We are a long, long way from, I think, being done with this bear market. So I would not be long right now. The reason I wouldn't be long right now, unless you're just going to dollar cost average into your indexes and not look at it for 5 years, fine. Whatever, that's fine. If you're trying to time the market, I think that, and by the way, none of us are perfect at timing the market, especially not me, but just thinking like macro-wise, I see a lot more risk in the coming year, like a high probability of there being downside play, than I do upside. I see maybe another 5%. Market could rip another 5-10%. Sure, could happen. But is it going to go to all-time highs again? Well, we have inflation at 8.5% and interest rates at 7%. Real estate on the down 30%, like collapsing. Job layoffs. We just came out of COVID. COVID's still technically still a thing, I guess, for some of the left-leaning people who are wearing double masks still. Supply chain issues. Like again, we're far from where we were when interest rates were 1.5% on mortgages here in Canada in January. We are so far from that. You got to remember that real estate is like number 3, and Canada is actually number 2 driver of GDP. Real estate, anything related to real estate. So we're talking like Home Depot, contractors, lawyers, realtors, all of the services and goods and all that go into building and supporting real estate in general. New builds, they're not selling. So soon builders will go bankrupt. When the builders go bankrupt, there'll be excess inventory in the market. No one could qualify to buy the inventory anyway because stress testing rules here in Ontario are like, you had to qualify like 7.5% for the fixed rate products. So you're talking like, you got to make like $400,000 a year to qualify for $1 million house. Like Toronto is just it makes no sense. So I see more downside ahead. I'm not super bullish. That said, if I can buy a property at significant enough discounts, I'm going to buy, and I'm looking at the long term. So 5 years from now, I feel really good about buying. So I don't know. I see there's still quite a bit of pain in the real estate market. We could be getting close to a bottom. I don't know. In some pockets, real estate's down 30%. A third almost of real estate's value has wiped out from March to now. That was quick. If you just bought a house in January for $1 million, it's worth like $730 now. If you put 25% down, your equity's gone. All you had was $300,000. You bought a house in January. You have nothing. Your entire net worth is wiped out. That's the fucking reality. But people don't realize that, thankfully. When they do realize it, they're going to panic and try to walk and try to sell their house and get out of it. And that's when all the speculators will disappear. And then demand will meet supply. In fact, supply will outpace demand. And then we'll have the opposite of the imbalance we've had for the last 2 years, where it was like you couldn't find any inventory. There's lots of inventory and it's building. So yeah, I see there's more and more opportunities ahead. That said, again, I'm still low cost averaging into the right real estate deals that make sense. Again, I'm in the business of finding stuff under market that really makes sense, and where those opportunities present, I'm excited to buy. Over a 10-year period, I feel really good about anything. Like even if you're buying the Nasdaq at the highs today, let's say, the highest we've seen in months, it's not going to be a big deal 5 or 10 years. So it depends on your time horizon, right? Of course, it'd be better to buy the Nasdaq on the next dip, which is coming in the next, probably after midterms at some point. I'd say between now and January, we will see a dip. Traditionally, this isn't a great time. End of summer is typically not a great time for stocks. But we'll see. No one knows. No one knows the future, and I think that it's important to be diversified in whatever you're investing in, whether it's real estate, stocks, crypto, lending, whatever you're doing. Be very careful and conservative and have diversity in your asset classes. I like real estate because you can touch and feel it, and it can produce cash flow and value for you in a way that no other asset class can, other than businesses. But businesses, again, are very, very active and subject to, I think, a higher level of risk. You get a better return, but higher level of risk than, say, owning a building or some land. All right, let's do some Q&As. Really late tonight. I got like 20 minutes late on this start tonight. What's the best way to manage Airbnb from a distance? So Andrew, I think the most important thing you can do is focus on good design and staging at the start of the project, and then so that everything's mint, get great photos, and set up a really good listing. And then it's a matter of it's automated. The most important thing to manage Airbnb from far away is to have several cleaners, always 2 at a time that clean, so there's a backup if someone gets sick or something happens. And your cleaners are going to document and report all of the damages. They're going to also clean the place. They are your boots on the ground. Your cleaner is super, super essential. But yeah, have some management on the ground. Obviously have a list of trades you can call if something goes wrong for a guest. You gotta act quickly. That's the most important thing. So almost all of it can be done virtually. You don't really even need to physically be there, as long as you have some boots on the ground there. And it's as simple as like maybe calling a few realtors there, or your realtor could be literally your boots on the ground if you had like an emergency. Hey, do you have a HVAC guy to fix the AC? Or hey, do you have plumber to fix said issue? But your cleaners will report the damage. You literally call Airbnb, you submit it through their process and then build a credit card, and boom, you're good. You literally get damages refunded to you. So yeah, Airbnb can totally be systematized. It's an easy business to run in comparison to, say, placing tenants and property management. I would say Airbnb is an easier and higher profit margin type business to run for sure. I like Airbnb because, again, you don't have long-term tenants. And so as inflation runs, which it will run until the currency is worthless, over the next 100 years, even at 3% inflation or 2% inflation, the currency is devalued to nothing, right? So that's why I made that sort of joke. But yes, so inflation-wise, I think that there's strong pressure to not want to lock into long-term tenants. You'd rather have, through Airbnb, you can have a tenant for a year through Airbnb, but at least you have your credit card on file for damages. At least they're paying every month a super premium for a furnished rental. I think there's some real advantages to that. So that's why I like the Florida vacation properties. I'm looking at some multifamily stuff there that makes a lot of sense, especially where I can get seller financing. I've thrown out like 40 offers in Florida for properties. You guys probably know this, but I'm throwing out offers aggressively, like often, to try to lock up properties that make sense. And especially with their seller financing, because inflation's running rampant. If you can get a seller financing at 3 or 4%, it's like, hey, it cash flows. And by the time you get the property stabilized properly and the value sort of released or unlocked, you're ready to refinance and rates have come back down. Because let's be honest, the government and businesses and real estate, the whole world can't support, especially government debt. The government themselves can't support their economy with the rates being as they are. At 6%, it just doesn't work. Most shit doesn't cash flow in any major metropolitan unless we have rents rip up, which who's going to be able to afford those rents doubling, or we have prices fall, which is what's happening. It's been great, actually. It's been the best time. I had so many people screaming from the rooftops at me for like the last 2 years. Can't find any deals, Mike. The prices are crazy. It's like we just wiped out 2 years of real estate's price inflation or price appreciation. It's gone. Now's the time to be buying. You can negotiate some dirty deals. No one is competing against you. You can get in there and throw in some lowball offers and make things happen. What's the best way to manage? Okay, here we go. When you were first starting out, did you write up the offers yourself? I did, yeah. How did you have the confidence that you'd be able to get financing after making an offer? Were you always pre-approved? So no, get it accepted, and then worry about it after. And so I'd run and like apply to like 4 or 5 different places. I would always go to 2 or 3 A lenders. It's a lot of work, by the way, putting together the financing package, especially as you grow and have more rental income and more leases and more bank statements you have to submit and all of that. All the stuff that's required to put together an application with a lender. But then you go to the B lenders too. So in case the A lenders don't come through, you have something as a backup, and you find a way to close. Always. I always have multiple ways I can close. There's always someone I can call at the last minute that I know will fund it at like 12% interest, or you know what I mean. There's always that backup. So just develop those backups. You don't have to offer firm right away. You could put conditions in this market, and then you'd have 7 business days for conditional. You could just lock up everything and try to assign it. I know people who are just locking up MLS deals for great prices with an assignment clause and then just selling it to someone else for 10 grand. And they went through the work to negotiate and all the crap. And some investor who doesn't have the time to do that or the know-how is like, oh, wow, this is a great deal. It's like, yeah, I negotiated it all for you. It's done. It's like 50,000 under market value on MLS. You can do that right now. And then you can just assign that to someone. That's probably better right now than trying to find stuff off market. You can literally go on market and shit's stale or expired or just sitting there stale and repriced and still no action. And so you could be someone who has balls right now, and you could get some really good discounts as a result if you could find the right desperate seller. Curious, are you still bearish on the market with the new CPI numbers? Yes. Although inflation's down, I don't have confidence that the rate hikes are done yet. And so I think until the government is ready to, and I know that the market is preemptively rallying, but I'm waiting for the next bearish cycle when they feel like the world's going to end again, whether they're like China's collapsing and the world, worries about that, or China and Taiwan, or something else happens in between Ukraine and Russia, or whatever, right? Something else is going to happen. At that point, I will switch from short to long. But I need to see the QQQ drop another 10%-ish from where it is now before I want to be long. I will continue to short. I'm holding a huge short position. It's no big deal. I'm not hugely on margin anymore, so it's like the market moves down 1%, I make 1%. Market moves up 3%, I lost 3% on my portfolio today. It's like, that was painful one day to lose 3% today. That hurt. On a portfolio of my size, it's like 95 grand. It was over 100 grand today I lost, but whatever. Like, I'm sure it'll be down 2% the next couple days, and I'll be up 100, right? It's whatever. Yeah. It'll be okay, guys. I'm more neutral. I should be neutral. I'm too short for how I feel. But I'm emotionally, this is horrible, but like, I'm just waiting for the time to be right. My ego is like, the market has to go lower. It shouldn't rally. There isn't a lot of upside. I don't feel like in shorting the market right now, I'm risking a whole bunch, because like, how much more can the market rip? We are in a rock and a hard place right now. I get that things are improving, sort of, ish. 8.5% inflation is not great. Real estate is still collapsing. Businesses are laying people off. The ramifications of all of that are months lagged away. So we are yet to see a lot of the pain that is to come. There will be a recession. We are in a recession, technically. So again, I don't feel really great about being super, super long. And again, I could be wrong. What do I know? In real estate, I know. It's easy for me to be able to look at comparables and say, hey, this property is way undervalued. I can buy Apple shares at 80 cents on the dollar, and I effectively buy them, right? But when I'm actually looking at Apple shares, I have no fucking idea where Apple is going, right? You can look at the NAV, the net asset value, and the earnings power, and try to say, hey, it's trading at a discount on cash flow or whatever. But the market is fucking irrational. It makes no sense. There's so many DIY traders that trade on, look at GameStop. Shit like GameStop and AMC and all these meme stocks, it makes no fucking sense. Up like GameStop, if your entire portfolio was GameStop, you'd outperform the NASDAQ and the S&P over the last year. Not even in a recession. If you look at, I think the year to date on GameStop's like up 8% or some shit right now, like, or 10%. It's like, what? It's up? We're in a recession because it's this gambling, right? It's just, there's no fundamentals behind it. It's just garbage companies that have no earnings right now, all speculation on what could happen in the future. That's not how I invest. I like to own quality companies that produce cash flow, quality buildings and good locations that can produce cash flow, that regardless of the market price, I don't have to look at the price. Like when I own real estate portfolio, I don't look at the price because all my properties are $1,000 a month cash flow positive. I can hold them for the rest of my life. No big deal. I don't need to sell. And so when there's no need to sell, it's like you can just hold, right? No big deal. That's why I like, when I'm investing in equities, that's why I like dividend stocks specifically. It's because like I don't need to sell. Just hold and collect my 5% dividend. No big deal. Now, I wish that was higher than 5%, but anyway. Here we are. Any thoughts on meme stocks? I really want to short AMC. Yeah, William, I don't know. Like, shorting is dangerous, especially meme stocks. You don't want to short against the gamblers. That's a losing proposition. Market fundamentals are not tied at all to, or like nothing. There are no value fundamentals tied to where the stock is going. Gambling. Whereas if, say, you were shorting, you're like, hey, Mike, business case for shorting the NASDAQ. It's like, okay, I could hear a business case for shorting the NASDAQ. We are on the verge of financial collapse. You know, real estate is on the verge and is currently crashing. And the ramifications of that, all the job loss and the lack of spending, based on what has happened in the last 2 years of stimulus, someone has to pay the piper for all of that. And I could see an argument to be short the indexes right now, or at least be neutral. But yeah. A friend of mine was commenting on the insane lack of supply of contractors and that the profit margins are really high. Is that BS? Would you ever start landscaping or window washing business? So it depends. A lot of contractors go belly up in their first 5 years. It is very hard to make a successful construction business. Meet Kevin tried and failed. He released the best video I know of on YouTube that just documents and discusses his journey trying to run a construction company. And I think Kevin's a really smart guy. I think he's a great marketer. I think he's probably as good as anyone at running a construction company. If he can't do it with a real estate license and a brokerage and connections to as much work as needed, he explained why it's $8 to change a light bulb, right? It should be like 10 cents, you'd think. But anyway, watch that video, understand a lot of the hidden costs. And it's just, the margins are not that great, I think, in construction. There are certain businesses that are very high margin. As an example, landscaping tends to be very, very high margin, especially when you get into the higher end jobs. You're doing like high-end paver stones and stuff, and you're billing a couple $100 an hour. That's great. Construction work, like renovation work, where you're billing your guys at $35 an hour and you're paying them $25, and you have $10 margin there, and it's super small when you factor in when they fuck up and you have to fix all of their work. When they sit around a lot, you know, the overhead on the trucks. Watch those videos. They do a great job of discussing that. I spent an hour on one of my live shows discussing that as well. I ran a property management and a construction firm with a friend. We were half in the ops, so I sort of ran it with him, and we lost so much money. It wasn't even funny. It's very, very hard to quote well and to honor your word, be a reputable, like to give everything you want from a customer service perspective. You have to charge a lot of money, and no one wants to pay a lot. So that's the challenge. Is like, it's a very difficult business to be in, and the callbacks can kill you. So it's just, it's not a business I'd be interested in being in. It's not a high margin business, but there are people who make a go of it and make good money at it, but it wouldn't be one I'd be interested in investing in. What do you think of laundromat businesses? They can be all right. It depends. I had a laundromat, and for us, it didn't go that well. But I could see how in the right location, a really busy one, if you have a really good system in place and you have good staff in place, and it could be profitable. I came really close. I courted buying an ATM route, a really nice ATM route here in London, and it was doing like, I don't even know, under $500,000 a year, but it was a good amount of cash flow. And still, I ran the numbers to tie up all that cash that's in those machines and trying to outsource a lot of the work, because I didn't want to be going around changing, you know, loading machines and all that. It's just too much. Even that, it wasn't that rosy of a prospect when you compare to, like, I guess my frame of reference is I can double my money in real estate within a 3-year period. And so like table stakes for me is like double my money in 2 years, 3 years. So I look at a business that does like 20% return. I have to put all that effort in, and I'm like, maybe it's because I have a competitive advantage in this business that I'm in now. So any business that bolts on to real estate, like wholesaling, I'm actively looking at building out a wholesaling arm right now. And I'm like, do I hire a couple guys and we just start getting boots in the ground and throwing out offers? By the way, if there's anyone out there who wants to make $20 an hour just writing offers, I would pay someone right now on a salary full time to just like analyze deals and throw out offers like crazy. We go to properties, lock them up, and then talk to investors, get investors to look at the property, and just basically resell contracts and wholesale. There is a huge market for that. There is going to be a bottom, and when the market turns and investors have confidence again, we will have old comps from 6 months ago that were at the bottom of the market. And so appraisers will have to use those comps that were at the bottom of the market, and the market will start rising. and we will have all these shitty comps. So when we get to go into seller appointments, we'll walk in and say, hey, this is what's sold in the last 6 months. Because sold takes 3 months after it actually sold, right? The actual close date is usually several months after. So there's a lag. And in that lag window, I want to be going so hard on acquisition, it's not even funny. So part of me is thinking, and again, like, I have a good life and I don't need to build another business. There's no need for it. But it's, the entrepreneur in me is like, shit, I can make an easy $1 million doing this right when the market pivots. Even just like if I have to find a bunch of investors and acquire them myself and manage it myself, I fucking will. Acquire $100 million in real estate at the bottom, that'd be cool. Using those old comps right before it turns. Strong cash flowing stuff. That'll be an interesting proposition. I don't know, we'll see. It depends. There's so many ways I could invest my time. So many things I could do. What do you do? What's the right call? You get the right people in place and you can put them in the right positions and you can have a kick-ass business. You get the wrong people, the wrong positions, and it's a fucking headache. So, I don't know. It's all about finding the right people. Want to buy vacation rentals. Where is the best place in the USA versus Ontario? That's really subjective. I like Florida. There's some really great pockets in Florida. I want to build out a business in the East Coast and the West Coast, specifically the East Coast because it's so close to the Bahamas, strategically speaking. I see some real value there. So I will be building a portfolio in Florida. Honestly, it's year round there. Like this summer was just bustling with people and rates were crazy for Airbnb stays. And then in the winter, when it's cooler, that's when all the Canadians come down, right? For like the snowbirds. And that's bumping then too. So it's like, I don't know. Legitimately, like in New Smyrna Beach and Stewart, it's like $400 a night to stay anywhere, like in a hotel room. So there's just so much opportunity, even in the summer. So yeah, it's just juicy. And then in Ontario, my absolute favorite place. This is maybe personal because I grew up on this beach, but I think anywhere between Sarnia and almost Goderich, that stretch on Lake Huron, like Grand Bend, Port Franks, down into Brights Grove, that whole area there is just fantastic beaches. Beautiful, beautiful golden sand, tropical blue and turquoise water. Almost feels like the Bahamas in the summer there. It's just beautiful. Some of the best beaches and clean water, super safe. If it was a tax-free nation, I would live there. Unfortunately, Ontario is crazy for tax, so that's something. But I will spend my summers on the water there for the rest of my life. And so if I could build a business around that and give me something to do so I'm not bored, that'd be cool. That'd be cool. So I'd like to acquire 20 or 30 units, 40 units in that strip there in the next couple of years is all my goals. And then I would like to acquire a couple hundred units as well along on either some lakes in Florida or also along the coasts there, close to the beach. So that's my sort of plan for acquiring properties that I feel really good about holding for the long term, as opposed to buying garbage in like East London. Like, that's not a nice Pokemon card I want to collect and hold my portfolio. I got dirtbag tenants. I don't want that. I want like quality, more luxury style properties I can be proud of, that I can hold and give to my kids someday, right? Like, that just will appreciate and grow in value. I think those A-level locations, they will grow faster and be in more demand. They're only making so much lakefront and beachfront property. So I like to just acquire it in the right areas and just hold on to it as it appreciates in value. And you got to remember that like inflation is going to create some ultra trillionaires in the next 30 years. And so there's going to be a plethora of ultra rich people out there. And I honestly believe funds, like large institutional funds, are going to start buying up a lot of the properties. And so I could see a nice exit to a fund in 20, 30 years where I take like a 9-figure payout. That'd be cool. That'd be on the vision board. I don't know. I'm like, retirement's boring, guys. I got to do something. I got to grow. And so for me, that's how I want to grow. So if you want to be part of that, cool. Let's grow together. Let's do something together. And I'll share along my journey what I'm learning, what's going well, what fucking sucks. Yeah. Okay, so Hong Kong Fooey says, all the places I'm looking at in Toronto will be negative cash flow, which means I'd be speculating on appreciation. Are there any examples of when it would be worth it to invest in Toronto? Toronto hasn't made sense for a good decade. However, I'll say this. in the GTA, there are pockets where I've seen like really nice 10-bedroom triplexes that could rent to college or university students or on Airbnb furnished and do $1,000 a month a bedroom. So you could bring in $10,000 or $11,000 a month. And I saw a property like this recently in Toronto that sold for like 1.1 million. And I was like, geez, that's 1% rule. That would cash flow really well. So just throwing that out there. If I was bullish on Toronto, I actually saw another property that had 10 bedrooms in it that could all be nicely furnished, had 3 kitchens. It was kind of like a nice setup for like $899 in GTA area. And I'm like, that also could be interesting. But buying a single family house or a condo, no. Like, if you're gonna live in, or you have to live in Toronto, I guess, or you want to live, I don't know why you want to live in Toronto, but you want to live in Toronto. Interestingly, I'm just gonna, I'll finish this thought and then I'm gonna share another thought about Vancouver in a second here. But if you had a house hack or something, I could get why you might buy something in Toronto. But interestingly, you look at the luxury market. If you compare a $4 million house in London, like a nice luxury estate in London, to the greater Vancouver area, there are some pockets where you can buy a nice mansion in Vancouver for 4 or 5 million. And I'm like, geez, why is London for like a mansion the same price as like outskirts Vancouver? It's like, what? I can live in Vancouver for the same price and have the same house? It's wild. As you get into the really luxury pricing, like the $4 or $5 million range, very small buyer pool, it pretty much comes down to the cost of the build. And sometimes you get deals on these dated places, and it's like you can buy a mansion in a big city for the same price as a small city. So it's like if you get to that point, I pretty much live in a mansion now. I'm like, geez, I could sell my house here and buy like a really nice place on the outskirts of Vancouver. It's like, interesting. Vancouver isn't for me, I don't think. But just an interesting thought. I have some friends in Vancouver and just thinking about that. Okay, so Chuck Norris says, can you talk about contingencies? What contingencies do you put in place when you write an offer? So there are lots of conditions you can write in or things like that into your offer. I used to have a really big bank of great clauses. I had silver bullet clauses that would auto escalate the price of my offer until I won by $100 at a time or $1,000 at a time. Some agents don't like that, but I used to guarantee that in a multiple offer situation, I'd always win up to a max price. You gotta be careful because shiesty agents will use get their friends to put in fake offers and boost your price up. So be careful with that clause. But things like, warranty on all the current electrical, plumbing, heating and cooling, that's been a lifesaver. A furnace broke just before closing and they had to honor that because they put it in the contract that everything was warranted. And at the time they signed, like, yeah, everything works. Like, of course, the electrical, the HVAC, plumbing. And that came back to save me when pipes were clogged too once. That's interesting. I would always put those clauses in for people to warranty all of that. And most sellers don't even think anything of it. Like, you put in the warranty clauses and all the mechanicals. That's a good one. Obviously, visiting the property 3 to 5 times. Or I used to leave it blank. I would just say, right to view the property with 24 hours notice. So then another pro hack is like, if you have a rental property, you could rent it out before you close. And so you could collect a first and last on a triplex. That could be like potentially like 10, 15 grand you can use towards your down payment. So you can actually rent out a unit before you own the property, which is interesting. There's some legal consequences if you didn't close, obviously, so be careful. But I've done that before. What else? Your standard inspections, your standard financing clauses, partner approval is a good one. If you're trying to wholesale, you say, hey, I need 7 days partner approval. And that gives you time to wholesale it without saying you're going to wholesale it. I don't know. I used to have a whole bunch of things that I would throw in my contracts. And I had some unorthodox pieces that I've thrown in, but more recently I haven't. I've just been staying to what's simple. If you make a complicated offer to an agent may not be likely to want to push your offer to the seller, or you might spook the seller. So simple is better, in my opinion. Once you have one condition, there's no need for all the rest, right? You're conditional, you can walk away. You don't need to put financing and inspection, just put financing. It's the same thing. If the inspection doesn't go well, you walk out on financing. So a lot of people get crazy with the conditions, and it spooks the buyers. So I'd prefer to get the price down as opposed to adding in conditions. But you can add some cool, vendor financing stuff, delaying their capital gains in certain ways. I've done ones where the seller stayed on and lived in the property for a little while as a condition. They paid a really high price because if they were going to stay, I wanted them to pay a really high rent, so they were incentivized to leave. And I ended up just crediting the most of that back, but on paper I wanted it to be very, I wanted to be prohibitive for them to stay. I don't know anything about Gatineau, so I can't comment on that, Anna. If it's undervalued, go for it, but be careful. If you're looking at comps that are 2-3 months ago, then you might think it's undervalued, but the current value is lower. So aim for lower, run your numbers tighter, take another, like if the market might dip another 10% yet, we've down 30%, it could down 40%. I don't think it'll go down more than 50%. So if you get property at 50% off the March comp prices, you're good. And you can get that in this market because there's just so little demand, so little people can qualify, and there's so much fear. Thanks, Ryan OD. It does sound fun. When do you start looking at 100 and 200 unit multis? For me, I'm just not there yet. I also just don't have a desire to take down any big deals right now. I've looked at dozens. Every big deal I look at, the cap rates aren't that attractive. With interest rates being where they are, none of it cash flows. There are no 100 unit buildings that properly cash flow at 7% interest. Your cap rates are like 7, best case scenario, in larger metropolitans and desirable places. I mean, you can buy shit 100 unit places in like the middle of nowhere that'll have a 12 cap, but then you're owning a property in the middle of nowhere, and that's potentially undesirable. It's a lot of work to take on a big building like that. So for me, to manage risk, it has to be the perfect deal at a good enough discount. I could do it. It'd be putting a lot of eggs in the basket, unless I brought on a partner, in which case I wouldn't be tying up any of my eggs. They'd be the money partner. But yeah, if the right deal came along, I would. For me to want to justify partnering, though, it has to be a really good deal, right? Because if the investor's going to bring the money, they want to know that it's a better deal than they can find on the market themselves, which it would be. So maybe, we'll see. I may take down something big. I've looked at a lot of big projects. It's just the right one hasn't come along yet. I think I'm through all the questions. Sweet. It's past 8 o'clock anyway. You know, one of the downsides, Eric, about laundromats is I think people are in general finding that laundry is cheaper and cheaper and easier to install in units, and they now have like portable units you can buy for $200 and put in your kitchen that hooks to your faucet. So I think laundromats are a dying business, and I think that 20, 30 years from now, people won't really, in the same way, they won't be as desirable. We're seeing a declining trend, and I don't love to be in a business that's shrinking. That said, you could, you know, still do well in the business. There's no reason you shouldn't have it. It is recession-proof in the sense that, like get to put gas in your car, you got to wash your clothes, right? Especially if you have like giant blankets that don't fit in a regular machine. Those Super Duty machines, they do well at the laundromat, and they will always serve that purpose. So, yeah, I mean, it's a business that is a nice cash business that can have good margins, especially if you are handy or have a connection to a cheap repair guy, because the machines break all the time. If you have a cheap repair guy, then it can be very profitable. Or if you repair the machines yourself and learn how to do that, it can be very, very profitable. If you're outsourcing that at like $80 an hour to a company to fix the machines all the time, it'll be just crushing your cash flow. So if you want a really passive business, I think a laundromat's not that, unless you reach scale and had dozens of laundromats, in which case you could hire a full-time tech and just have them on staff. Then it could make sense with economies of scale. So yeah, anyway, guys, I'm gonna wrap this up. Thanks so much for watching tonight. I appreciate it. If you're watching the replay, check out those YouTube shorts that I made. I'm just messing around with those. Like if those are valuable and you like to watch those, I'll make more of them. But yeah, I just kind of messed around on my phone. I didn't do a great job editing. I just literally put a couple of videos together, had a little fun with it. If there's anything that I missed, obviously you can find me on social medias, on Facebook, on Instagram. You guys know where to find me, at Mike Rosehart. And the secret to unlocking wealth through you, 3 levers in your control of your financial future: spend less, earn more, and maximize returns in the difference. Thanks, everyone. We'll see you next week, every Wednesday.